Right, now I'm sure you all heard the saying that the trend is your friend. We never trade against the trend. Alright? Why? Because we're not salmon, and it's no use trying to fight against a storm of bears. If the market's going to fall and everybody's sentiment is negative, why are you positive? You need to go with the flow. And this is how we see where that flow is in technical analysis. So obviously if the trend is up, how do we know that the trend is up? What you would actually do is you would go and see and look for a series of higher highs and higher lows. Okay? So if we look at this upward move over here, you can see there's a low, there's a low, there's a low. Each one of those lows is higher than the previous. Okay? Same as the highs. There's a high, and there's a high. Right? So we've got a series of higher lows and higher highs. So we know the trend is up. Now I've drawn a nice channel there for you so you can see it quite clearly. So at the bottom there you would see that shares will be regarded as cheap. Okay? You would see positive sentiment in the market and accumulation. So the smart money is here at the bottom. The smart money. When the smart money starts to move, that is when you and I as private investors will start to see that. We can't anticipate what their movements are going to be, but we need to move with them. But we've already identified the trend, so we go with the trend. The trend is up. Are you going to be selling shares while the trend is up? You're going against the market? No. All right. Now, it's quite easy to identify the trend. But the key here is to identify when the trend actually changes. Now, if the trend is going up and you've got a series of higher highs and higher lows, when it changes, you're going to get a high, which we've got over there. We've got a low over there on that trend line. We've got a low over there, and we've got a low over there. Here. So we've got now a series of lower highs and lower lows. Only once that has happened, and you can determine where the first lower high is and the next lower low is, that is when the trend has changed. Not before then. Okay? Why not before then? Because something like this can happen. Market goes down. You think the whole market's going to go down. You sell all your shares, and then what happens is it comes back again. If you see this section over here, it's gone through that trend line. Okay? A lot of inexperienced investors would have thought that the market was changing. But that's the thing. Don't trade what you think, trade what you see. So you need to wait for every single formation or definition to actually complete before you make a decision. Right, there's our series of higher highs and higher lows, and there's our series of lower highs and lower lows. What happens at that stage? Like I said, a lot of investors will probably get out of the market, okay, and get scared and frightened. But the smart money knows exactly what's happening, and what does it do? It corrects and it runs up the page. So you need to wait for the trend to actually confirm that it's changed. Just because that's a lower low, you need to wait for a second high and a second low. So it would have needed to come down here. Everybody follow? That's how you define a trend. Then your intention. Are you a long-term investor or are you a trader? If you're a long-term investor, then you'll be looking for shares like this, a long-term trending share. Why? Because it goes up the page, slowly and nicely at a gradient. Although it's got its ups and downs, okay, shares have to do that. They have their own cyclical nature. So when you're looking at it on a chart, you will be able to see whether the share is a trading share or a trending share. Now, for a long-term trending share, you must consider the time span. Now, on your software and a lot of other software, you have the facility where you can look at a chart on different time scales. All right? When you switch on your computer and you open up a share, it will automatically default to a daily graph. Okay? You can change that to a week, a month, 3 days, 6 months, a year, and so on and so forth. So if you're looking at long-term trending shares, you need to look at a longer period. Okay? Long-term trending shares will clearly show you there's less volatility. It's not moving up and down like radio waves. Okay? Within itself it is, but the long-term trend is up. This is where the bulk of your investment should be. Okay? And obviously shares with high dividend yield. And you're going to find those in your large caps. And then obviously with this long-term trending share, you must find the right technical indicator. So it's no use using a short-term technical indicator with this share, because it's going to give you a lot of false signals and you're just going to get quite frustrated and irritated with it. Okay? Then we have a look at a trading share. If you're a short-term investor and you want to take opportunities of buying a market low, okay, and selling it high, that means buying shares cheaply and selling them expensive, which is what you can do in equities, then you would look for a share that is giving you a very cyclical, showing you volatility. Okay, so you can take advantage of those cyclical movements over a very short period of time. Okay, now for the long-term investor, this looks like a sideways movement. It is sideways movement, and that sideways movement for a long-term investor is quite frustrating. Okay, because the one week your share is up, the next week it's down, and so on and so forth, and you get confused with what your portfolio is doing and quite irritated. Okay, so that is the wrong share for a long-term investment. Okay, look for the trending shares long-term. Trading shares, short-term only.